Oh, welcome to the On the Tape podcast, Guy Adami. I'm always joined by Danny Moses. Danny, how are you?
I'm good, man. How you doing?
A great Dan. Nathan, Dan, how are you?
You know how I'm doing. I see you every day.
Fifth studio album by the band The Who is Who's Next. One of the great albums of all time. By the way, who is next? Well, I'll tell you. It'll be Danny Moses, it'll be Vincent Daniel, and it'll be Porter Collins. So stick around for that.
For another edition of What Are We Doing?
Right, fresh off their CNBC Fast Money.
By the way, they were great.
They were great. On the desk, all three of them.
Yeah.
It's Big Short week on Fast Money.
I've never been, when I've been on the desk a few times, A block, B block, C block, D block, they were only supposed to be on for like 1 or 2 blocks. They stayed on for half an hour.
Well, that's because they were very good.
Is that what they do? They do real time?
I'll tell you.
Do that.
We never do that.
Have
That's never. That's
because
never happened.
if they sucked,
Yeah, but who's judging the suckiness or not?
producers.
well, the
And
producers. Mel is the arbiter of
You
suck.
can tell when she likes a guest.
That's true.
You know what I mean? And you can tell when she does it, and that segment gets short.
By the way, Johnny Carson, the great Johnny Carson of Tonight Show fame.
Correct.
If he liked the guest, he would keep him or her around. If he didn't like the guest, Audi 5000.
You're out.
Okay. By the way, as I mentioned, Who's Next is a great album.
Yep.
It's a desert island disc. In other words, if I were stranded on an island and if I had to pick 5 albums, Who's Next is coming with me.
Disc?
That's what they call it.
All right.
Desert
So
island
now,
disc.
after Spotify's number, I'm just thinking we say streaming. All right. go.
However,
Yeah.
there's a laundry list of songs.
Yep.
The 5th song, the final song on the first side, Dan Nathan, the name of the song is The Song Is Over. Now, I mention that because in a lot of weird ways this week, what we've seen over the since the fall, it appears as though maybe the fever has broke. Maybe, in fact, Dan, the song is over in terms of this ridiculous market from lower left to upright. Thoughts on that?
Well, listen, we've been talking about the concentration in the mega cap tech stocks, right? And it really has been focused around generative AI. The names that have been positioned to benefit from the tens of billions of dollars of spend that has obviously been a beneficiary for NVIDIA. At some point, this kind of had to come unwound. We've been talking about it for weeks. Last summer into Q2 earnings season, right? We'd already been in a little bit of an generative AI mania. And as soon as we got into earnings, and as soon as we kind of heard what these companies had to say, that they would not be able to monetize these investments anytime soon, they didn't actually say it. That was the read-through of the results and the guidance. And then the NASDAQ and the S&P, they sold off at least 10% from highs in July to the lows in October. But then that fever hit again because the CapEx accelerated. NVIDIA every day of the week was telling a different great story, right, about their platforms and what's coming next. And so here we are right now at its lows this morning. We're recording on Thursday afternoon. NVIDIA was down about 25% from that June 20th high. Big reversal day there. I just want to talk about that, guy. You've highlighted that reversal day, all right? I think it was like an 8 or 9% range. Today, we have about an 8 or 9% range. At one point, the NVIDIA was down nearly 7%. It rallied back. It's gone up on the day, but it's barely up on the day. Is this as important as a potential bottom as that wasn't as important as a potential near-term top?
Glad you asked. I didn't do it in the Danny Moses voice, but I'm glad you asked, Dan. Because as we said, on March 8th, that was a Friday, NVIDIA made an all-time high on that day, closed lower on the day, and it closed below the prior day's low. That is what we call an engulfing pattern. We talked about how that set up for a move lower, potential move lower, which subsequently we saw in mid-April. From peak to trough, NVIDIA went down 24%. Let's fast forward, June 20th, the same type of formation. And then we saw the subsequent move, obviously today being Thursday. So the question one has to ask, is this the beginning of something bigger, which full disclosure, I think it is, or is it just another sort of garden variety sell-off that will be bought? Time will tell. But what's interesting is, and we talked about it with Porter and Vinny, and Danny, I'm certain we'll talk about it in the second half of this show. One of the mantras that they brought forth on Fast Money was, make volatility great again. And for the first time in a long time, we saw, Danny, a volatility index that breached 19. Now, we had the conversation that it's not the VIX necessarily that they're trading, but volatility, Danny, appears to be back in spades. So that was a prescient call by both Vinny and Porter.
For sure. And when you get that type of volatility, the books, as we call them, that are out there, these levered books, right? These beta neutral things that occur, they're forced to effectively start to take down leverage. So what you start to see is some of the big winners come in, right? Obviously, we had that great rotation last week for a period of time where money came out of kind of the large cap, went into the smaller cap names. You had that massive reversal. I guess what's happening here is now you have to figure out what is the level, and this is what I've been talking about for months, when these stocks do start to sell off. What's the buy point? It's not 40 times earnings. It's not 35. It's not 30 or what multiple of revenue. That's the big question. And this feels the most like 2000 it has in the last 5 years right now. I remember sitting on trading desk. Dan was sitting on trading desk. You're on a trading desk. When you start to see stocks sell off on not bad news, just sell off, and you're like, oh, and you're kind of frozen, and you get this kind of knee-jerk reaction. The stocks make a little bit of a comeback. To your point, I don't think we're done yet with this kind of sell-off here because there's no reason to go back and buy these things now, given the macro environment.
Yeah. And so at the lows today, the S&P was down about 5%. And many of the names that you just mentioned, Apple was down about 9-10% from its recent highs. Microsoft was about the same. Obviously, NVIDIA was a lot more. Google, Amazon, Meta was down more than 10%, but they were all down about 10%. So doubling up on the losses of the S&P. What does that tell you? You already spoke about the rotation, right? Into kind of, I don't know, some like things that just have been, dogs for a while, specifically, obviously, and you guys are going to talk about the KRE, the regional banking index, but also, you had this situation with the Russell 2000. So small cap. So if rates are coming down, the more economically sensitive, the cost of capital is higher, their access to credit, that sort of thing, they're benefiting. I just want to make one last point here about the NVIDIA and the kind of supply chain that exists there. So when Google came out earlier in the week and Tesla came out earlier in the week and you didn't see a meaningful guide higher in CapEx, I think that this is going to be really important next week when you have Microsoft and Meta. If they don't do the same, okay, and they don't guide higher, then I think a lot of air comes out of this trade. And I think what's different about this July versus last July is that they already sold off really hard because, a little bit of the fever is breaking. So if there's any fundamental reason to assume that this is like the end of this CapEx cycle, then people will start getting focused on valuation again. It hasn't mattered on the way up, and we know that valuation's a bad timing tool, but it can reinforce some theses that are already in place about the fundamentals.
Before I get into more market stuff, since you mentioned fever, WKRP in Cincinnati.
Great.
Johnny Fever?
Oh, my God. He was a genius. Yeah. But Bailey Quarters, it was sort of Bailey Quarters and Lonnie Anderson were sort of...
Lonnie Anderson.
Were sort of, that was like the Ginger and Marianne of the 1980s.
Where are you going with this?
I'm not going anywhere with it, but I just loved Bailey Quarters, and I love
I thought there was a stock symbol WKRP.
By the way,
is that doing anything?
The other disc jockey was, if you recall, Venus Flytrap, which is one of the great names of all time. This is an unanswerable question, Danny, but I'm going to ask it anyway. We've seen so many odd things happen over the last, forget about a couple of months, couple of years, and we've obviously seen a pretty interesting market move. Was there any catalyst that you could identify this week that sort of triggered this, or is it just a culmination of a lot of things?
Well, as I mentioned on Fast Money the other night, I go to oddschecker.com. I use it a lot. So a lot of the macro stuff that's been going on versus the micro, we've seen earnings and that's its own thing, but has been about the election. And all the Trump trades have already been happening. I mean, it was already assumed certain people out there are slam dunking that he thinks he's going to win, whatever. So now when Harris steps in for Biden, all of a sudden the odds changed. And literally you could correlate in real time. She went from 4-1 to 3-2 to win the election. The market sold off yesterday. There's certain sectors that were actually selling off. So I don't know if that's exactly what it is, Guy, but there's more than that. To me, it's the numbers out of Germany. It's the numbers out of China. It's a global slowdown. Oil's kind of reflecting a little bit of that. And the number one telltale sign to me, which is actually infallible, if you go back and look, and I won't get wonky here, Dan, I promise. We talk about the 210.
100%.
Okay. It's been as inverted as 70 to 80 basis points. It's now basically the tightest it has been, 20 to 18 basis points down between the 2 and 10. However, when the entire yield curve comes down and you get a flattener, it's called a bull steepener. You think that's bullish for the market? It's not. It's basically portending the recession. So while an inverted yield curve normally predicts a recession, the bull steepener of the curve, when it does happen and starts to flatten out, is almost 100% saying. So what I'm saying is, I don't know the cause and effect, the horse or the cart, but I'm watching that right now, and sectors will move with that 10-year yields coming in and 2-year yields, but sometimes you get these false moves both up and down because of that. So anyway, that's
Guy, you and I were discussing this earlier. So this GDP print came out this morning. Expectation was up 2%, right? And so we came in at 2.8%. Q1 came in at 1.4%. And you can go into a little bit of how we got that excess. But, I'll just say this, if 2/3 of GDP is consumer spending, it doesn't kind of line up because a lot of the data as it relates to the consumer is clearly weakening. Now, one thing I'll just say is that consumer staples are near 52-week highs. So they're trading pretty well. I don't know if you saw those Coke numbers. It's making new 52-week highs.
They'll have dividends.
Procter and Gamble. Right. Yeah. So maybe defensive, high dividends, especially if yields are going to come down. But consumer discretionary is doing really poorly.
All right. So I don't want to make too big a deal, but you're 100% right to point that out. Again, the GDP print is what it is. But as I said on Market Call on Thursday, David Rosenberg, after GDP came out, he sort of dissected it a bit and said that 2.8%, if you go under the surface and take a look, it's really not what it appears to be. A lot of it is government. A lot of it is people savings rate going down and inventory build, things that can be explained, and maybe it's not as robust. Because if it was as robust, some of these retailers, I think, will be trading a lot better. And then the two names that I always look to see what the hell's going on, both MasterCard and Visa. MasterCard specifically made an all-time high in March, around $500. I think it was $490 or so. And here's a stock that's now trading sub $440. And you'd be like, okay, not a big deal. That started to sell off long before a lot of things started to happen. So I would submit that look at the dollar stores, look at these retailers, look at a name like Lululemon, which is a lot of Lululemon specific. There's a lot of damage being done. And then when you look at the names that are consumer facing and very important, names like MasterCard and Visa, they're showing signs of weakness.
Yeah, so
here.
Vinny and Porter are going to hit MasterCard and Visa. I just want to make one other point about large consumer purchases. You guys, you've seen these auto numbers. It started with Tesla and GM. Ford's a disaster. As we're talking about it right now, down 17%. Stellantis, Toyota, they're all really bad. And then I'm going to take you to the airlines. The airline numbers, everybody cut their, forward guidance. And then lastly, the cruises. Remember the cruises?
I was talking about Royal.
Yeah. And then you saw what Comcast had to say about parks, what Disney's likely to say in a week or two about parks. So those are kind of bigger ticket items that we're talking about as a consumer. And we've obviously, Danny, if you want to talk a little bit about the trade down that we've seen into Walmart and the like. Now, Walmart trades like it's
immune.
Yeah, it really does.
Immune.
And so does Costco too. So, I mean, a lot of cross currents in the consumer, but they're all pointing one way.
I look at those GDP numbers, they don't mean anything to me. I mean, if it had been 0.4%, it would be just as meaningful as 3%, because you're right, the breakdown is what matters. I remember last year, they were very low prints and earnings were accelerating. I look to the earnings of the companies and what they're saying to tell me what I need to say. I'm not going to look at economic number, government mumbo jumbo, stuff like that. But yeah, for sure, the consumer is slowing. And the reason that Fed fund futures are now pricing in 50 basis points of cuts basically in, towards the end of the year, almost 75 now towards the end of the year, and 150 to 175 for next year. They're bringing that forward. It's why the yield curve is doing what it's doing and compressing. Dan, it really comes down to, even though you bring up Royal Caribbean, down 5% today, great quarter, reinstated a dividend, right? Great, $1.60, first time since the crisis they put that back in. It's fine. It's just fully priced. How much better can the cruise industry get? How much better, to your point? And at some point, Dan, you've talked about this for the last couple of weeks. The Walmarts and the Costcos, they're going to have to give it up. And they may not even miss numbers to have the stocks come in. And that's when the trading this market, people figure out and seem lost. And I'm going to say this one more time. The amount of leverage that these beta neutral shops have, when volatility goes up, they are forced to, quote, take down their books. And that's really all it is, the same way they raise the leverage. And Guy, one other thing right back to you on this is the yen. And we've talked about the Bank of Japan. We talked about the yen. Use it as a telltale sign for what's going on in the market. We've gone from 161 to 152, basically in a straight line, with the help from the BOJ intervention. But what does that mean? It means the carry trade itself unwinds slightly, right? A weaker yen is actually good for risk on. So forget what it means for Japan in and of itself. Just understand that. So I'm looking at all these things put together, and risk is coming out of the system.
And listen, you bring up a lot of interesting things without question. Again, I think the one thing that I'm going to be laser focused on now, amongst many, is the unemployment rate. I still think everything hinges on what the unemployment rate starts to do. And I thought late last year, Dan, that you'd see a significant increase. That proved to be incorrect. I think it's just happening later than I thought. And this move from 3.4 to 4.1, although still historically low in terms of the rate, when you look at the rate of change, that's what's going to start to scare people. And if we start to see this stair step, like I think, the market's going to take notice of that. And again, when you have an economy that's 70% driven by people having jobs and buying things, that's going to be an interesting tell to see how the market reacts.
And this comes back to earnings and revenue growth, right? So if we're seeing a consumer slow down, what are companies going to do? How do they react to that? Well, they try to raise prices, but they're not probably at this stage of the game going to be able to pass those through. So they kind of cut CapEx, they cut where they can, and then they cut jobs, right? And so that's, I think, really interesting. I want to go back to a point that Danny made with, you can spend a lot of time on the macro, but it really comes down to this point about earnings. And I want to read this. This is from John Butters. He's a senior earnings insight analyst over there at FactSet, and we get a look at his work every week. This is from last week, and I think this is interesting. He was talking about the participants or the contributors to S&P 500 earnings, and he was talking about, in particular, NVIDIA, Amazon, Meta, and Alphabet. So those are 4 of the Mag 7. This is a fascinating sort of stat here. These 4 Mag 7 companies are expected to report year-over-year earnings growth in the current quarter 56.4%. Excluding these 4 companies, the blended, earnings growth for the remaining 496 S&P 500 is 5.7%. So when you think about that, I mean, that is just out of control. And then he kind of brings it forward. He said, overall, the blended earnings rate for the entire S&P 500 for Q2 is 9.7%. So you just have so few names doing so much of the heavy lifting for the S&P earnings. And we know it's trading at 22 times forward. If you see a slowdown in forward guidance, that's how you get a couple turns lower in the S&P 500.
Well, what have we said for a while? The lion's share of the move, not the entirety of the move in the S&P, but the lion's share has been predicated on multiple expansion. What does that mean? It means the market participants are willing to pay more for a dollar's worth of earnings for whatever reason that I can't identify the reasons. Maybe it doesn't even matter. However, at some point you need the earnings growth and the revenue growth to be there to at least offset or mitigate some of that. And we're not seeing it. It's being masked by, to your point, 4 to 7 names that are doing all the heavy lifting. And if they, God forbid, were to give it up in any way, shape, or form, then that's when things start to unravel, in my opinion, Dan.
Yeah, I just want to make a point. We've been highlighting a handful of names or sectors that are trading very poorly in response to their earnings. I'm looking at a ServiceNow. Okay, so we've been talking a lot about over the last year how these Gen AI names have really stolen the thunder from some enterprise software names. Well, ServiceNow is up 15% right now on the day. It's making new 52-week highs. I mean, there's a whole host of names. We just talked about how bad the airlines guidance were. American Airlines was trading at a new 52-week low after they gave a horrible outlook. Well, it's up 5% right now. So Danny talks about buy points. Heavily shorted names that have been underperforming relative to the market. At some point, there's no one left to sell, and shorts who are involved in the name have to buy it.
Well, when you degross, you have a long book and a short book, you take your longs down, you got to cover your shorts. I think that's what we're seeing.
Yeah.
That's what I saw this morning. Whether it follows through or not, I don't know, but I think it's just market positioning.
Yeah. I want to make one other point. I had dinner last night that would be Wednesday with a very large...
Dox yourself. Go ahead.
What is that?
I'm not going to say where.
Yeah.
I'm not going to say where.
I was at Charlie Bird, which is a Ryan Hardy restaurant.
I like it.
So
I've been there.
Great restaurant.
Ryan
Hardy was on OK Computer last week.
Why are you yelling at me?
The chef restaurateur. He's an amazing.
You sit at the bar there? You sit at the bar?
I sat at a table.
Okay.
Now I can't dox the crew that I was with. But one of the guys I was with is a big trader at a big bank, and he takes a lot of risk in the derivatives market, okay? Another guy was a big trader at a big hedge fund who takes a lot of risk. And the other guy was a broker who sits in the middle of them. And one of the things that was really...
Now I know who paid for the dinner at least. Go ahead.
All right. But one of the things that was really interesting has how the trader at the bank, the trader at the hedge fund, were talking about all the edge that we used to have as traders on the desks that we grew up with, it's all gone. Like literally the way the market structure has worked, right? It's like these guys have these major quant strategies on both sides. It sucks for the broker because he's right in the middle and they're taking like teeny little bips where they used to take quarters and halves and this and that, whatever, especially in the derivatives market. And what that says to me, because it's changed a lot since we were on those desks, is that the machines are in control. This morning, when you saw the semis fall off the cliff, that wasn't a bunch of guys saying, or gals saying, hey, get me out of NVIDIA. That was a bunch of machines that are programmed based on a whole host of factors, right? Doing that. And then the reversal is kind of the same thing to the upside. And I just want to make that point because a lot of our listeners are self-directed and they're doing a lot of their own stuff. Just, understand who you're playing against, I guess, is the main point I want to make.
There was a little Michael Corleone in there.
I saw something strange today.
Right? You did that. You didn't even realize you were doing it, but you did it.
I love
You've
that
done it.
scene. So that's
Do you love that scene?
Godfather 2. He's talking to Hyman Roth.
Right.
They're
out on the patio.
It's somebody's birthday.
Smaller piece.
No,
it's Hyman Roth's birthday.
I know it is.
And remember, Hyman says smaller piece.
By the way, that was his last
Show everybody
birthday.
the cake.
Spoiler alert, that was his last
You know what? He should have gotten whacked on the. If I'm surprised Michael just didn't off him right there.
I know. Michael was the coolest.
He needed
cat.
more information.
The coolest cat. Fredo didn't even see it coming. You know what I'm saying? He was a cool cat. I'm just saying.
I think there's a scene, if you go back and look, and I'm getting a little off topic here. I'm sorry, Amanda, but there's a scene in Godfather 2 where they show Fredo who has pneumonia and they were trying to tend to him. And one has to wonder if when stricken with pneumonia as a young child, as a baby, that impacted Fredo later in life.
Oh, that was the flashback.
So I have a bit of a soft spot for Fredo, although I'll say...
Well, you're saying that he had a soft spot in his brain a little bit.
Well, I think maybe the pneumonia wreaked havoc on his facilities, his faculties.
On Michael? The one character who had a beat on him.
Don't say Kay.
She did.
No.
I think she knew exactly what he was.
She thought she did.
Okay. Should we move this
I'm going to ask you one more time, Michael. But there's a great scene at the end.
Don't ask me about my business.
There's a great scene at the end of The Godfather, the first one, if you recall. Dan just, I don't know if you can see that, but Kay went to the door and he shut it right in her face. Yeah. Right, that's fantastic.
I know Vinny's in the other room.
All right, so listen.
Enjoying every moment of that.
Exactly.
But
although this portion of the show might be over, the song, in fact, is not over because when we come back, Danny Moses sits down with Porter Collins and Vincent Daniel. So stick around.
Welcome back to On the Tape for another edition of What Are We Doing? A really special week, considering the three of us were on CNBC's Fast Money on Monday. And let me just tell you guys, I've been on there several times, and I was on there as a trader, which means I'm on for the full hour. And normally, the A block, B block, C block, D block, you guys are supposed to be on for 1 or 2 blocks, and you were on for half an hour, which means either in real time, they're like getting feedback from people that are watching and listening, or the producers decided, or it was Melissa Lee, the queen, who decided you guys were going to stay on. But that was some episode, which we're going to get into in a moment. But Porter, first things first, people out there that don't know, we're on the eve of the Olympics, and I know it's near and dear to your heart. And Porter is a 2-time Olympian, 1996 and 2000, if I'm not mistaken. Is that correct, Porter?
Correct.
Rowing. Okay, I know you didn't medal, but you won some world championships, and we won't go into why you didn't medal. You can blame the guy that was in the 4th or 5th seat. I don't know who it was, but whatever. So before we get into anything on this eve of the Olympics, Porter, what are your predictions for the U.S. rowing team this year? Do they have a chance to medal in any of the categories? Give us your insights, my man.
I think the women's 8 is going to medal. I think the men's 8 has a good shot of medaling, and I think the men's straight 4 has a very good chance of winning the gold.
All right. Well, I didn't even know he was going to say that. We got a little handicapping out of the way.
Now, are you going to put some chips on that?
It's 100%.
All right. Just checking.
I don't think it's inside information.
I want you to be consistent.
Although one of his best friends from Brown might be one of the coaches, so maybe he shouldn't have told us that, but whatever. And Vinny, to you on your sports achievements, congratulations on the Mets completing the season sweep of the Yankees, and you're sitting in Guy's seat. And so I feel much more comfortable with a Met fan being in there than a Yankee fan right now.
It was truly a thing of beauty the last 2 days. I mean, if you think about it, being on Fast Money,
right,
I get to predict the AFC Championship Jets. We'll see if that comes true. It was mostly the needle guy. But I have to say, the Mets look really good. The Yankees look lifeless.
They do.
And it's a long season, so...
Well, we used to joke in the office all the time back at Seawolf that when the Yankees will win, there'll be a bull market and the Mets will win a bear market. And lo and behold, it coincides. Kind of the Mets got hot and the market's kind of sold off.
By the way, the funny thing is, I love doing that. NVIDIA topped out roughly at the same time and the same date as the Yankees' highest winning percentage.
There you
go.
And
I think that's like a perfect correlation.
All right. Well, guys, good to have you back. We have a lot to get through. And for those people out there that, the Bears, this and the other, Vinny and Porter have been coming on this podcast now for several years. And the last few times they've come on, they've given out, I want to say, cumulatively probably 15 to 18 names, of which the majority have been on the long side. that are undercovered by Wall Street, that are kind of off the beaten path, value names, call them whatever you want. And some of these stocks are up 100%. I'd say on average, I'm guessing they're up 40 to 50%. And so for people out there that don't choose not to listen because you don't want to hear, quote, bears, you're doing it wrong. And you need to go back and listen to, because this is an ongoing thematic thing. And as a matter of fact, right before we walked in here, I asked Porter, I go, Porter, how many analysts on your FactSet machine cover Amazon? Can you just give me that real quick, Porter?
It's roughly 80 people cover Amazon.
80. Right. And we're talking about some of the names you guys are either no one covers or 3 people cover or 10 people cover. So let's get right into it, guys, right here. So let's kind of rehash a little bit. And Porter, I'm going to start with you on kind of the theme you talked about on Fast Money on Monday, which was make volatility great again. And the reason you say that is because it gives you guys an opportunity to take advantage of it. So give us your thoughts on that and why that's so important here, just in terms of stock selection.
Well, I also mentioned make value great again, which I was hoping for. And I think the thing that you can really see, and I mentioned it on CNBC, that, we hadn't really, we're value anyway, but we haven't really shifted the portfolio. And you could see that first leg of rotation last week, the market hadn't fully rotated yet, right? And this week, the rotation kept going. And I think a lot of money managers said, oh man, I really don't want to do this. I don't want to buy value names. One of the most amazing dynamics is the Russell 2000. All the market caps combined is 2.9 trillion. There are 3 of the Mag 7s each that are above that. And it's just, there's too much money chasing too few assets, right? And so I think I still don't think the market knows what to do with all this rotation. Is it Trump? Is it Harris? Is it, what is it? And so, I think that the market's struggling through it, even guys like us are struggling through, which is the best way to go. But, is it recession? Is it not recession? Are we getting rate cuts, or is it inflation inflecting back up? And so, and one last point on that, the diversification in the S&P 500 in terms of names and themes is the lowest it's been ever. And so the market's had an unbelievable first half. I think the market's still up on the month, which is nuts, right? And, you've seen this just giant AI push. And the question is, I think the biggest question a lot of people have to answer, is this a fad and is this over? That's one of the biggest things in the overall market that people have to answer.
Well, we've always said that anybody can buy a stock, right? That's easy. And anyone can buy one of the Mag 7s. That's easy. But when you talk about shifting and just buying an ETF in the Russell, that's not how you do it. You buy individual names within the Russell. And so, Vinny, I just read your guys' first half letter. Congratulations on a great first half. And if you look at it, they're names that 95% of people have never heard of and kind of names. So take us through some of the highlights of that and how you guys are doing the diligence and finding these names literally that no one's ever heard of. And these are names with catalysts that people need to pay attention to. And sometimes they do and sometimes they don't. So talk about kind of greatest hits of the first half here.
I'll give one example of a name that Porter and I are pretty proud of because it's outside our historic footprint. And that's Philip Morris International, right? And where did that come about to us? None of us smoke cigarettes. None of us do vapes or anything else of that nature. But we read 2 reports and spoke to a friend of this consumer product called Zyn.
ZYN.
Right. And we learned that Philip Morris International bought Zyn through this company, Swedish Match. And then we started looking at Zyn and how much it was growing. And it was the fastest growing consumer product in the United States. And then we started asking friends, have you ever heard of it? And because at least I didn't hear of it. And all of a sudden, everyone from whether you're our age or 15 years old, athletes, right, use it because it's a better alternative. It's pure nicotine. Traders are using it. And the growth rate was crazy. And of course, that growth was not reflected in the stock whatsoever. At the time that we started buying it, it was, I think, $88, $89 a share, Porter, something of that.
Sure.
ilk.
And it was a balance sheet self-help story also.
That too, where they acquired Swedish Match. They had to take on debt to do it because they paid up a little bit for it. And as a result, they were a little bit over indebted, But these tobacco companies, as anyone who knows them, and I've gotten to learn them, have 40% EBITDA margins. They cash flow like crazy. And so as a result, they'll easily pay down the debt. And not only that, they went from a company that was, let's call it 0% revenue growth, now growing revenues between 6 and 10%. So for us, this was, wow, this is a gem, maybe a potential trophy property. We'll see. There's some regulatory risk, clearly. But that was something where we did the work and really sized up. I mean, it went from 0 to a top 7 holding, Porter, I think within a week and a half after all the work that we've done.
And one of the things that we do a lot is we screen for stocks, and it showed up on our valuation plus return on invested capital screen, and it has roughly the same in return on invested capital as Google.
Right. So take us through. So some of the screens you guys use, I know you do, Vinny, you're big into overbought, oversold, PEs, cash, free cash flow, yields, things like that. What do you see right now that's kind of standing out to you the most in your portfolio or just in the market in general that leads you to? So, and I asked the same question for Porter here too.
Well, one of the more fascinating ones that I love to look at is out of favor. I call it out of favor and overbought, right? And as we know, as we've learned, all of us, sadly, because we like to go on the dark side, but it's a lot easier to make money on the long side. So I like to really scrub through the out of favor names more than anything else. And not surprising, and it's a very simple screen. A lot of people do it, but it's interesting. I'm looking at things that have an RSI. The main parameter is looking at
relative strength index.
Relative strength index under 30, which basically means it's tanked, it's under-owned, it's gotten hit. And you're finding right now a ton of, not surprising, consumer discretionary names that are there that have really fallen out of bed. We haven't bought many of them, but it starts the process. Lululemon, Ulta Beauty, Nike, Starbucks, Celsius, and to us, there.
It sounds like the game password you're trying to get me to figure out to buy something.
Exactly. No, but it begins the process of us saying, okay, within that group, does anything fit our thematic eye? And then as a result of that, start doing work and maybe sometimes just taking a 1% position and to really start the process of doing work to see, should we make this bigger or not?
But here's the best one. And Porter, I'm going to turn this over to you here. The number one factor, given our history in the world, is if you can find a long with a high short interest, right? That has a trump at all. Because if you find that, then you know you have built in, for people out there that hate short sellers, you shouldn't hate short sellers, but if you're out there and you use it, if you actually believe in the story and you're right, guess what you have? You have embedded buyers that are guaranteed to buy the stock back. So Porter, on CNBC on Monday night, you pitched a stock called Pure Cycle Technologies. First of all, we've talked about it before. You've written about it before. You've been in this position for a long time. But a name like that, which, yes, it's not a zero-sum outcome. Obviously, I'm not that familiar with their technology, but heavy short interest. Go through that story a little bit here, just the highlights of it, because you did it on Monday. The stock's up, I think, 25% since you were on Monday night. So
better lucky than good, right? I guess. But we've owned it since, I would say, November, and it's basically a plastic recycling company that doesn't recycle plastic bottles, but more polypropylene, anything kind of hard plastics that you can't recycle. And so this is they have a patent on it from Procter and Gamble. Interesting company. If they can get it work, it's one of a kind property, and obviously the demand is virtually unlimited, right? All these companies want this to blend into their plastics, and so they could call it recycled and stuff like that. And so, we had seen it when it initially came out of a SPAC. It was broken, got down to like $2-3, and we started doing the work. And one of the things that showed up on our screen was it had at that time, call it 25% short interest, right? It was 25 days to cover, and call it 25% of the float was short. And most people thought the factory was broken. And so we got into the stock, and they were doing some fixes on the factory, and they've done 2 fixes, and each fix has gotten a little bit better. And so they've started to ramp up the utilization. And right before, like a couple of days before the CNBC appearance, they announced some slightly positive news about mixing some of their recycled product with other products to get a bigger output. And so I pitched it, and the story sort of took a life of its own after I pitched it.
The whole point of that is that I brought up at the beginning that 80 analysts and people cover Amazon, and I'm assuming 5 or 7 people cover this PCT, if even.
At most.
At most. And it's just the eyeballs that go into it, and therein lies the opportunity. People like comfort that think other people are with them. We've always, 3 of us, and even Steve, thought, outside of outside the box, but also looking at things that no one else is in, both on the long and on the short side, Vin. And another SPAC that we talked about, and we did a whole SPAC theme on the last time you guys were on here, is this Genius Sports, which I talked about on Monday, and we've all been in for a while here, and we're heading into football season here, and it is the AI data provider from the NFL data provider to the online gambling companies, DraftKings, Flutter, Caesars, MGM. And what people don't understand is, as we moved in the sports gambling world from just Colts -6 and over 43.5 points into these parlays and into the receiving yards, their technology and the access to NFL data allows them to produce these bets to sit onto the system that the bookies feel good about providing. And the margins on those non-traditional bets are 6 to 7% they get of gross gaming revenue versus 1 to 2. And so here we are, a company with over $100 million in cash that just got a large overhang removed because Apex, private equity firm, sold it all, that is probably going to do at least $80 million in EBITDA in 2024 and a lot more than that in 2025, that has a technology side of the business, that has a media side of the business, and nobody is paying attention to it. Why? Because it was a SPAC and it's kind of a small cap name. And I know you have thoughts on it as well. And it's great when we all kind of agree, on a name, but yeah.
Well, what I was going to mention is this concept of idea generation, right? Like you could get it from screens that you look at, but you could also get it from friends and colleagues who have an expertise in a certain field that you don't.
Right.
Danny Moses has a proclivity for the gaming industry, right? He's seen a lot. He's invested in a lot of these names, and Lord knows he has gambled a lot. So
my first game on Atari was Casino, by the way. I was 8 years old. The one with the roller.
It wasn't Combat?
No, it was not. It was not Asteroids. It was Casino. Was my first game on the thing. But anyway, where you used the roll. Yeah.
So I also want to highlight one thing, a favorite Danny Moses-ism.
Oh God.
Which is clean up in aisle 9.
Yes.
And I don't think you put enough emphasis on the cleanup in aisle 9, because one of Danny's favorite things was if you owned a stock and you liked it, but it had this weird overhang, like a selling shareholder or or anybody. And this had a cleanup in aisle 9. And that allowed us to, double or triple the position. Same with you, as the big, private equity shareholder sold.
And the stock sat there. And the stock sat there for a day and a half.
And that's a function of inefficiency.
Correct.
Right? Because no one's looking at these names. And so as a result, you have a lot more time to do some work, because it's not going to move initially. And so as a result, and I remember when you pitched it to us and we did the work and we liked it, I said, sadly, this thing's not going to go up until this thing is absolutely clean of the private equity shareholder. And that's what happened. It's a great story.
Yeah.
We shall see. I use these concepts of trophy properties, right? Names where you could put it in your portfolio and potentially own it for 5 to 10 years. Those are the greatest names of all time. This has the potential. We'll see. This had, because it's smaller and the like.
Well, you actually called it right. The Visa and MasterCard, which I'm going to segue right into, is the Visa and MasterCard of the online gambling space. They're literally toll collecting in a B2B fashion, right, in the world, right? So that's kind of what it is. And there's only 2 of them, Sportradar and Genius. So, we'll end up seeing what's happening. All right, Vinny. So let's get into this Visa, MasterCard real quick. And then, Porter, we're going to hit your least favorite sector, obviously the banks, and get into some more names here. But Vinny, give me your takeaway on the mosaic in general of the consumer and the health of the consumer and spending, because you've covered these companies forever. So.
And then this is my core bread and butter. So every quarter, I generally read the transcripts and still keep like my detailed sell side analyst models for a lot of these names.
We used to call it the 16 candle crew.
16 candle crew.
Right. So the guys that are trapped underneath the glass looking up into the thing. Yes, Anthony and Michael Hall.
And you guys referenced it at the beginning, Guy, and Dan referenced it at the beginning. You did. The government statistics that show consumer spending pale in comparison to the quality of 3 names that you can look at and just read the transcripts, which are Visa, MasterCard, and American Express. You get those, you pretty much get the status of the U.S. consumer as a whole. And in general, the spending of the U.S. consumer, and this is the master of the obvious now, but it wasn't, I would say, a month or 2 ago, is that consumer spending on a nominal basis is declining. It's a slow rate of burn, but it's declining. It's more severe in consumer discretionary, and that's why you see things like Polaris, when they report, get destroyed, right? It is starting to seep into travel, and it's actually starting to seep into restaurants. Now, it's not calamity, right?
Yeah.
It's a slow burn. Now, here's the interesting part, which is I don't know what to do with this. On the other hand,
I'm going to tell you what to do with it.
No, on the other hand, you have the pure credit card companies. Think Capital One, think Synchrony, think Bread Financial, which I just listened to.
The old
ADS.
the old
ADS. What they're seeing on a credit side is a stabilization. The rate of change of deterioration has stopped going up, and actually in some cases it's improving. Now that's a function of underwriting. They've tightened underwriting standards. You're definitely seeing it in auto. So what we have here, which is a bit of a conundrum, consumer spending is slowing, but credit deterioration, consumer credit deterioration to be specific, is improving.
How much does the buy now, pay later? Is it even big enough to even dent this a little bit and create this elongated cycle of credit and sitting on a firm and some of these other places' balance sheets?
You know what I think it is? I think people weren't paying attention when everything was great. So rewind the clock 6 months ago, 9 months ago. Geeks like me have been noticing this deterioration for a while, right? This is not a new concept. It's been going on for a year and a half, 2 years. So what we're seeing now is just a peaking. And as a result, there were some interesting opportunities in this quarter. Take a look at what some of these consumer finance names have done in the quarter. And this is probably a reasonable segue later on into Porter's most hated sector, is that they've outperformed massively as a result of better than expected consumer credit trends.
Yep. And so, Porter, with that, let's shift into the banks. I know you really hate even dealing with them, but because of our backgrounds and your guys' backgrounds in particular, once you understand a bank balance sheet, financialization in general in the market, you can cover any sector. And I think that's what you guys have done great, and you've stepped into other sectors over time. But bring it back to the banks here a little bit and kind of, is there anything to do in them? What are you seeing and, the way these things are trading?
So one of the most interesting things that happened over the last, call it 3 weeks, prior to, I'll call it the debate, the Trump Biden debate, and when everyone, sort of more in the Biden camp, these banks were left for dead, right? And I think they on the Goldman Sachs screen, they were screening as like the most shorted, most underweight they've been like ever.
Well, we're talking KRE, or are we talking
KRE?
Yeah, we're talking KRE. So if people out there, we're talking about the regionals. Okay.
They, by the way, just to throw it out, they underperformed for the past 2.5 years. They've underperformed the S&P by roughly 35%.
Please keep. Well, there's a reason they wiped out a couple of them along the way, but please go ahead, Porter.
I listen very fairly, right?
No, so, I'm not. I don't have any axe to grind in the name in the.
And if you're a avid listener, Vinny and I did come on, as much as we do dislike the banks, we came on and pitched 2 banks recently on the show, which have done very nicely. So it was that massive underweight position, the beginning of volatility and the beginning of the rotation trip, right? And you look at Meta. Meta's flat since Q4 earnings, and these banks are now outperforming Meta and some of these other ones. It's just unheard of it in this market. And so that's what I think. I think this market is all again about there's going to be a good rotation or bad rotation, right? The bad rotation is that, listen, AI's a hype. NVIDIA's sales flatten out or go down, and the margins go down, and NVIDIA stock can drop. I don't know what it can drop, 80%, 50%.
Yeah, just back to where it was. Basically.
But that's going to be horrendous for the market, right? The good type of rotation is, that these things don't really, NVIDIA doesn't fall out of bed. The
grows into
other
its multiple over time.
The other Mag 7's earnings are fine, and you get some of this, mixed rotation, but it's not a disaster. But some of the value stocks, keep doing better. I mean, look at the Philip Morris. I mean, we were better lucky than good. We got a little value rotation into that stock, right? So I know our stock picking has been very good recently, but it's a little bit of luckiness of timing. So,
but you guys bring up a point that, I don't know which of you said it a few minutes ago. No one cares until they care, until they have to start looking under the covers and what do I own? What is this? And when I do rotate into something, what am I even buying? Because that skill set is out the window. I mean, the amount of funds that still do single stock selection, of course, they're there. You have the mutual funds that are benchmarked against the Russell that are always stock, they should do very well in this type of environment if they're really bottom-up stock pickers, so forth. But that's the key to me. And you guys have been kind of ahead of that. And we made a joke on CNBC, again, about how net long you are, even though a lot of that, some of that's gold, so it doesn't really count as kind of a net long. But in general, you can be known as a short seller, but all that does is make you sharper on the long side. Because when you scrutinize something, when you approach it from the angle, what's wrong with it, what's wrong with it, what's wrong with it, and you like that, unfortunately, I probably do that too much and I don't fall in love. But again, so Vinny, some of those names kind of quickly, we're going to hit the big one here. Don't worry, people. We're going to hit the big one we haven't gotten to yet, Tesla. But some of those names on the long side that you've kind of found recently, and we just mentioned CCB was one of them, right? There's some other names. Maybe just touch on those for a couple minutes.
Well, and CCB is run, so I don't want to advocate
tell people what that is
buying
again.
it right
It's a
here.
Seattle-based,
So it's a north of Seattle-based, very small bank that happens to be what is called bank as a service, or is what we used to call it back in the day, a rent-a-bank. So essentially, they would rent the charter to some non-banks, and in this case, Walmart or Robinhood, to provide banking services to those companies and get paid a fee for it. Just so happens that this small little, I think it's 750 or 800 million market cap now, has essentially won the Robinhood Gold Card contract. It also has won the Walmart debit contract. And so, of course, what we did was, this is crazy. Let's call up the CEO. And we realized the CEO was leading with service, compliance, and personnel. And he told us, he goes, this is the reason why I'm winning deals. And I feel like, they all say this, but I feel like I have a better technology stack. So we started doing work, bought it, and it worked really well. The other bank that we own is, again, another small Vegas-based bank called GBank, right? Again, similar mindset where they are winning deals as really a technology services provider to non-bank financials. And we found a lot of opportunity there, particularly the fact that this subsector, because it's really small, had a lot of regulatory scrutiny on it. So these stocks were on their ass. And that's typically where we love to shine, is when stocks are on their ass. There's a contrarian thing, but there's a positive fundamental rate of change that we think we could exploit and take advantage of.
Right. So Porter, before we get to Tesla, let's spend a couple minutes on kind of gold here, because gold over the last couple of days has come under a ton of pressure, which is, it has done that before, but this feels like either a stop loss, someone got taken out, or whatever it might be, because all roads point to gold should have been accelerating these last few days. Just curious to get your thoughts why we've pulled back here, basically $100, from kind of recent highs here, and what you guys are doing in gold.
Sure. I'll give a quick gold and a quick energy update as well. The gold, I think day to day gold does its own thing. And I think that gold probably over the last couple of days has suffered like tech of working well this year, right? I think that the theme of the last 2 weeks is Tom Petty, even the losers, right? And so I think the winners have seen a pullback. And but I think the story for gold, and I pitched this on CNBC, is that we're adding $1 trillion of debt to the U.S. balance sheet every 100 days, and that's not slowing down under either regime, Biden or Trump. Trump's talking about cutting taxes. That's not good for the deficit either. And so, and then the record amount of central bank buying. I mean, look at China came out recently and they said they paused in the month of June, which had sent gold down. I don't know what 5-10% or something like that. And then all of a sudden, India comes out and they have a record amount of buying. And the other thing is that I think is even more interesting is that they're taking they've repatriated all their gold from New York and from London back to their home countries. And that's a bigger deal. And I think and there's been a lot of talk about, reserve currency, reserve asset status. And I think you're seeing, and a lot of talk about a BRICS currency. And so which Americans can't even fathom that the US dollar would not be anything but the reserve currency. And you're starting to see a lot of signs that that's not really the case. So, and then on energy, a lot of people have gotten scared about what Trump's going to do, because Trump his big tagline is drill, baby, drill. That's how he's going to force down inflation so he can cut rates to save all his real estate. And, one of the things that we've seen is that we said, okay, who's going to benefit from more drilling activity. And so we recently took a position in a company that's 52-week low called ProFrac. ACDC is the ticker. And
it's not really ACDC,
we think that,
is it?
Yes, it is.
ACDC?
Yes, it
Okay.
is.
Yeah,
That's
it
the
is.
ticker.
Yeah.
All right. That's fantastic. Yep.
And so that's an optionality play for us of more fracking. And I also think that you've seen oil demand be very, very good and better than people have expected. And one of the things that, like, there's always push pulls with the economy. Oh, consumer slowing, it's stretched. Oil demand and jet fuel demand have been excellent. And so, and I think going into the election, even though people are scared of Trump, that Russia and Saudi Arabia want a higher oil price. And so I think that's a interesting contrarian idea as well.
I think, though, when you look at China, Germany just came out, lowest factory orders in years. Like, there's certainly, I see oil trade more off of that, at least on the macro stuff, than it does, at least sometimes if there's geopolitical stuff going on, in the Middle East, it'll shoot up. But the trend feels like it's going to continue to kind of hang out here in this kind of 78 to 82 level.
78 to 82 would work really well for the equities,
for sure.
Right, and so the drama and the narrative around oil seems far higher and greater than the actual price. If you could sign me up for 70, call it a 78 to 85, which I don't think is going to happen, but if it was 78 to 85, I think these oil related equities would do hunky dory fine.
Yeah.
Right.
Yeah, they're cash flow machines.
Yeah, they are.
Right. You forget, people don't incorporate how good the balance sheets are, right? How big the buybacks are, how big the dividends are, and so I think that I think that's what.
Yeah, listen. I mean, you talk about ESG things that were left for dead. Philip Morris, energy, gambling stocks, even from a ESG perspective. So good on you guys for looking at those. All right, let's get to Tesla here. We made it about half an hour, I think, before we got to it, and we were joking prior to the quarter being reported. I think 20 minutes before it came out, Porter started putting in the chat with you and me, Vinny. Oh, this, and then of course the opposite, happened in the sense of you have to expect that they're going to juice you, but they didn't, and that was a horrendous quarter by any metric. And again, this
in the auto,
yes. But Vinny, EV credits were $1 billion.
If any Tesla bulls want to listen to, we are doing the work.
You take out EV credits, Vin. How were
I agree. In the auto, their energy numbers were good.
Yeah,
right?
But it's not good. Yes,
I'm just saying.
Fair enough. The energy numbers were great. It doesn't warrant an $800 billion market cap. Anyway, Vinny Porter, who is this guy over here? Anyway, so
I don't know.
I'm the balanced one.
I'm kidding. I'm kidding. Listen, I said before that if you want to own AI, go own NVIDIA or one of these other things. You want to own auto, go own GM. You're messing around with a guy who never comes through with what he says he's going to in terms of Musk, and whose core business. You'll agree it's their core business,
100%,
is deteriorating rapidly. And
Correct.
The fact that the delivery number, Porter, before I let you speak, the people were excited about a 4,000 unit beat on deliveries, on July 1st or 2nd, whenever they came out, when they only produced 411,000 cars. Of course, the cash flow would be 1.3 billion in the quarter. But anyway, people still want to believe what they want to believe. Stock had a big sell-off. But Porter, from here, and I was to tell you, that was an all-time call for Musk. Some of the quotes he gave with humanoid robots, and there's 8 billion people in the world, and that means we're going to sell 8 billion. That does include industrial. All the stuff he went on and on. It was old vintage Elon, which always tells me it's when he's desperate. So Porter, give me your thoughts here, Tesla, and what did you do after they reported?
Well, I shorted it 30 seconds after it reported. So,
Okay,
I mean, one of the things that really I put it out on Twitter that really got me going is that, he threatened Tesla shareholders going up to the pay package thing. If you don't give me my $56 billion, you don't get AI. And now it comes out that he set Tesla in, we don't know how big these are, the numbers. Tesla sold NVIDIA chips to XAI. They didn't put that that was in the quarter, but they didn't reference it in the revenues, and probably in Vinny's, energy numbers or something like that.
Right.
Juice them.
Right.
Anyway, so they sold NVIDIA chips in the quarter to XAI. Now, Elon wants Tesla to take a $5 billion stake in a zero revenue, cash flow losing company valued, last print was 25 billion. So you could call it, this is 35 billion. So $5 billion is going to get you a 15% stake in XAI. The whole thing is so ludicrous and so mind-numbing. And how people own the stock and call themselves serious people is just crazy.
Well, it's more of a cult, I think, people that instead of owning, because Vinny, there is no fundamental argument. Don't even start with me that there's a fundamental reason to own this stock.
You know, I have said this is an analyst's worst nightmare, right? Yeah. Because when I put in the numbers and I saw the credits and I saw the margin deterioration and I saw everything, I still thought the stock might go up because the people who own this stock, God bless him, God bless this man, somehow, some way, he got everyone to ignore 85% of the revenue stream for 15% of the residual revenue stream, and something that probably potentially will happen in 2035. It's not even about 2035. It's not even a probability. The interesting thing I saw, because it's a narrative story, right? Like my model says X and it should be worth sub $100, and of course it trades materially higher than that, is he kind of lost the political angle, or potentially lost the political angle. So walking in for the last month, Musk bent the knee to Trump. That was the whole thing. Musk bent the knee to Trump. Can't lose, can't lose. And all of a sudden, Trump comes out and says, I'm going to get rid of all of the EV credits. So that larger than expected credit that came in the quarter, by 2025, under Trump, theoretically, that's gone, right? In addition to that, there's the spat between whether he's giving $45 million a month to Trump or not. And I think Musk said, I don't, which is hysterical, I don't give money to a potential cult, right?
Right.
If all of a sudden they start fighting, the narrative that the people who are buying this on the story have less of an argument going forward than they would in the past. So perhaps this stock is going to find some turbulence, even on the narrative perspective. Forget about the fundamentals. Even on the narrative perspective, it might find turbulence. We'll see.
Well, it's my argument that the narrative to cozy up to Trump is that on the next administration, if that ends up who it is that the SEC will leave him alone, the NHTSA or the NHTSA will leave him alone, the FTC. I mean, every agency has come at Musk at some point, and that'll kind of go away, and that may pave the road, no pun intended here, for supervisory FSD, whatever it is. And so there won't be a roadblock. So to me, I think that's more important to Musk than worrying about credits. But to the point, these ZEV credits, these credits that he's been getting that other fossil fuel car manufacturers have to buy from him have been the whole story on this thing in terms of, it was $1 billion in the quarter. So again, we're going to continue to fight. Musk has regained control, at least he did until the other day, the narrative, so to speak, that kind of got this thing. So it's an ongoing battle here, but I just believe in fundamentals, Porter, and I think at some point, I think that'll win out eventually. So
I don't know that we will win. I mean, sadly, I'd like to think we win, but I might just at some point have to cover and say I'll take a 2-year, flat to down stock, or 3-year flat to down stock price and call victory. But that's my pessimistic scenario.
All right, before we get out of here, big macro week next week. We've obviously been in micro week in terms of earnings and so forth, but next week we got the Fed, we got the Bank of Japan, we got Bank of England, but most importantly the Fed, and chances of a rate cut. I don't think it's going to happen next week, but it's gone up from basically 0 to 9%, and now we're looking at 3 cuts almost in 2024, and then 6 to 7 cuts in 25. How are you guys thinking about the Fed in the process of investing here, and what are you guys looking for?
Well, I'm of the view, in my opinion, I feel like you have to take a side in terms of probabilities. I'm of the view, and I've been of the view for a while, that the Fed is dying to cut rates. I think they know they're behind the 8 ball right now. It didn't show up or manifest in economic data for a variety of reasons, fiscal dominance probably being the biggest. But now it's really starting to show up in consumer spending. And we're starting to see a little bit of a deterioration in employment. So I think they want to start the process. They've been saying they start the process and they're dying to cut. I think it's too early to expect it next week. But I think they're really going to come in September. And if the economic data continues to deteriorate, they might do more than 25. I doubt it, but they might do 50. Now, what does that mean for us? Well, that means a positively sloped yield curve will happen. Probably gives a little bit more tailwind to the financials, potentially. However, it comes back to what we said on CNBC. This is another reason to make volatility great again. It's not going to be that easy. It's going to be very choppy because the underlying statistics coming from companies are going to be in a rate of change negative view.
So to make it interesting, I'll take the opposite view. I think that, the comps for CPI only get tougher from here. Core services inflation is running over 5% right now. I know, that the housing stuff will come in, but I think you've seen a low or a bottom in durable goods pricing, and I think that shipping costs will affect that in an inflationary perspective. I think it's going to be very hard for the Fed to cut rates. Trump's already slammed them. Don't you dare cut rates before the election. So I'm going to go for no cuts this year.
No cuts
before
Alex.
the election.
Okay.
So you could see that because me and him are not in agreement, we're not necessarily playing one way or another in a material fashion.
Well, it's interesting. August has been a horrible month, or a very volatile month, several times in the last 10 years, 12 years. I mean, I would say 4 or 5 of the last 10.
Call it our entire investing career.
Yeah, August has always been dicey. And so we have the Fed coming out, then we're going to get the jobs number, and then you're going to get some of that economic data that you're talking about. So we'll see what happens, but that's what makes a market. And I think we'll close with this. A lot of the stocks, which you guys have been talking about, really aren't dependent upon any of that. And the managements of those companies have their assignments, and they're going to do it regardless. And some of them may have debt that are impacted by, obviously, rates and so forth. But that's never going to be, you're not going to play that theme into the portfolio per se. You can trade that theme from here and there, but it is important just to pay attention to. So guys, it was great to be with you all week this week. You'll come on, I'm sure, over the, in the next month. We have some fun stuff planned together over the next few weeks. So look forward to seeing you there. And thanks again for coming on. It's always a pleasure. And I think all of our listeners learn a ton every time you guys are on. So thank you guys for being here.
Thank you, Danny.
Great to be here, Danny. Thanks.